Well, it's a 3-month anniversary of WPAY, the WeeklyPay Universal ETF from Roundhill. How has it done since inception? Well, we're going to answer all those questions today for you, as we've done since this fund came out. Hey guys, it's Doug, the Retirement Guy. Welcome back to the channel. We're going to do a deeper in-depth of WPAY. How has it done over the 3 past months? How did it handle the market correction of November? And let's see if this fund is really what it's cracked up to be. But before we go in there, I got to do a shout out to all of our Patreon supporters and all of our YouTube members. Without you guys supporting the channel, we could not do what we do. And we also want to shout out to our 25,000 plus subscribers. Welcome back to the channel. If you're not a subscriber, don't be afraid to hit that subscribe button, hit that bell notification. We'd love to have you. We're trying to hit that next mark of 26,000 subscribers because everybody wants to know what to do with their financial situation. And if you can support the channel, don't be afraid to hit that Patreon description down below. You can join for free, or you can join as a YouTube supporter. Let's get into today's video. Well, let's take a quick glance at WPAY, how it's structured. And WPAY, if you're not familiar, is Roundhill's WeeklyPay Universal ETF. It launched in September 4th of 2025 and is designed to offer weekly distributions to shareholders. It's operated as a fund of funds, and that's investing in other exchange traded funds rather than direct individual securities. And now the fund tracks an equal weight index composed of all the Roundhill single stock WeeklyPay ETFs, with a monthly rebalancing and maintaining a consistent exposure to each one of the funds equally. So the fund of funds model, it invests in exchange traded funds rather than directly into individual securities, and it's a leverage structure. Underlying ETFs aim to provide approximately 1.2, which is 120%, of the calendar week total return of their respective underlying security. Now, the fund does pay a weekly distribution, which is never guaranteed, and it's a commitment to delivering that weekly distribution to shareholders rather than typical quarterly or monthly schedules. So let's give the key fund metrics and quick facts. Inception date, September 4th of 2025 was when this fund initially came out. The expense ratio was 0.99%, which actually was waived all the way until September of 2026. The frequency is weekly payout, and the trailing 12 months yield is 15.35%. And you have to remember that yield of that is really over the past 4 months. So WPAY operates as a fund of funds, tracks an equal weight of the indexes of the single weekly ETFs. So when you see it over on the side, we put into basically the setup of all the ETFs that it's in there. And I'm not going to name them all, but you can see they got the Google, they got the HOOW, they got all the big powerhouses that Roundhill has been doing very well with. And the big thing to look is across the board, virtually everything is dialed into a very smooth equal pattern. That's pretty much in that 4.6 to 6.1 percentage ratio. So the goal of every month that they take and rebalance it. So if HOOW, I'll use that one for example, if that one boosts up and the value really increases, they will sell off some of the HOOW, bring it back down to that 6% lane. And if something is dropped off, and I'm just going to pick one out of the blue, and we'll just, the NFL, the Netflix one, let's say that one really shrunk down, they'll buy more shares to get it back to the 4.6 position. Now, WPay is characterized as a high income, high volatility investment rather than a stable buy and hold income fund. So I want to make sure you note of that. And this stuff changes month in, month out. Like I said, they rebalance every month, so these percentages will change, the yield will change. So this is just the current information that we had on the anniversary date of the fund. Now the price performance since inception. You can see here in a little graph that we've made is when the lowest point was $43.19. The highest point was $56.50. And you can see we're on the lower end of the scale at $47 at the time of the video. So the volatility pattern, the price history shows significant choppiness and volatility rather than a smooth upward trajectory. It's described as a roller coaster with yield compensation pattern. The current position after the initial volatility, the price settled in between that $47 to $48 range, showing the underlying leverage structure impact on the trading bands. The investor implementation, holding WPay requires tolerance for significant price swings. Like I said before, the buy and hold, slow and steady strategies really are not suitable for this fund. It's really a high volatility income play. So, again, this is one of these things. The weekly pays are going to have a lot of volatility to them. When we take a look at the distribution and yield history, I pretty much in a quick little chart here, we tried to show you the range is from about 34 cents to 88 cents. So you do have a wide range of income. So there's nothing you can just set and say, I'm going to get 25 cents or 50 cents or $1 or whatever. You can't set and do that. They do have a consistent delivery potential. WPay has maintained a weekly distribution schedule since the inception, providing regular income to the shareholders, but that's never guaranteed. So remember that. No matter what we say, it's not guaranteed. The yield characteristics, the analyzed yield based on the recent weekly payouts indicates a high return potential through the subject to change with price fluctuations. And the variable amounts. We talked about that. You can see the different variable amounts across the board. When we take a look now deeper into it, look at the pattern since September 4th when it opened up just above $50 a share. It had a little bit of a sawhorse or saw blade type look where it was giving you some ups and downs, sharps up, sharps down, back and forth, and then started a little stable. And then November came with the November market correction and it dropped all the way down, and it's slowly trying to develop back out of that mark. Right, so we show $46.97. It's down 7.36% since the year to date. So as we keep talking about that, year to date since inception is 15.38% for the yield. Now, Roundhill always gives a distribution rate. I always call it the suggestion, and they have it that in 12 months the distribution should be around 58.37%. Now that's not guaranteed. That number changes on a weekly basis, but just shows you that the percentage looking farther out long term, that it could be up to the 58%. Now the downfall of this is the growth and gain or loss side of it. They're down 7.36%. So right now in the first 4 months, you have a total return of 8.02%. So you can do the math. There's basically you're gonna have 3 different 4-month periods. So times the 8 times 3 should give you a total return that you could project if the numbers all stayed the same and everything stayed in prediction. So 8% over 4 months. Do the math. That's about 2% per month. So a quick comparison would be 24% over the 12 months. So what can we conclude from the early performance of this? Well, based on WPay's performance since September of 25, there's several conclusions that we can operate from this performance. Weekly income delivery. That potential consistent pay distribution week is pretty much has been promised so far. It fulfills the core objective of providing regular income streams. The high yield, the recent payout indicated at 15.35% analyzed yield. Now, of course, remember that's year to date, making an attractive income seeking for investors, and the volatility consistency with design. Both the price share and the distribution show expected volatility. So they're getting exactly what they figured they would and what they expected to get from the fund built the way they do. So it does reflect the fund's leverage and enhanced return structure. So what remains unknown and the uncertainty is, with only a few months of data, several important aspects of WPAY remain uncertain. Long-term yield sustainability. We can't determine over the full market cycle, bear or bull, insufficient data to assess how WPAY's yield will perform through variable market conditions. We've seen it how we had the little market adjustment in November. We never got to see the April 2nd drop off. So it's kind of like, how is it going to work out? The true multi-year total return, without a long track record, it's not possible to evaluate WPAY total return, which is the price appreciation plus income minus any drawdowns over multi-years. But we can see already that in just the first 4 months, you've collected an 8% total return. The risk adjustment performance metrics. Reliable calculations of risk adjustment performance can't be made without current short-term track history. And NAV decay or struggling drag due to resilience and derivatives and leverage exposure. The potential net asset value decay or structural drag over extended period of times will remain unknown. Will this do what a lot of other funds have done and have that NAV decay? Well, we have to look at other pieces of the puzzle to get a guess at it. And I hate guessing when I'm investing. But so far, we've seen a 7% drop off. So who is this suitable for? Well, it's experienced income and focused investors. It's short-term to medium-term income seekers and investors with advanced understanding of how the program works and all the underlying pieces to it. If you're a conservative investor, a retiree or near retiree, or passive income, I call buy and hold investors, this is really not suitable for you. Now, I'm not knocking it. I'm not giving it a negative report. I'm not giving it, any which way on that one. But retirees really, like myself, they want that consistency of income. I want to know how much I'm getting month in, month out, week in, week out. The conservative ones, I can see people very similar that I know personally that if I saw the price drop 7%, they'd be freaking out right now. They'd be going crazy because they're losing money. And then the passive buy and hold. This is not a fund to just sit and hold and pray for the best. So overall, we see this thing as a plus and a minus. It's got a nice dividend yield. It's got some negative NAV there for an 8% over 4 months. I can't say it's not bad. It's done exactly what was expected from the inventors of the WPAY. Let me know what you think. So let's take the key takeaways and investment considerations on this one. Some potential benefits of it: that weekly income. WPAY delivers that weekly income since inception. It is, you got to remember though, that is not guaranteed, and that can be it's going to be a very fluctuating income stream. The high yield at that 15.35% so far is a nice number. Can we get to the 58% that Roundhill has been promoting and advertising? We'll have to wait and see. But remember, yield is not always the thing that you want to chase. You got to chase the total return. The other one to look at is that volatility is expected. That price is going to go up, down, sideways, every which way across the board. It does have an unproven track history so far because it's only been out for 3 months, and it's got that speculative allocation. So what is the take onto it? Where do we sit with it? As I said earlier, let's look at each one of them. You're not going to chase yield, so I don't want to put that out there, but 15.35% in the first 4 months. Roundhill's advertising 58%. Can we get to that point? I don't know. I don't have a crystal ball that'll tell us that, but that's what Roundhill's saying. Will the 7% drop off in the value of the fund, will it stay at that rate right now? Will it stay? We don't know that one either. But then the 8% total return, in 4 months, 8% total return, it's not too shabby. And if we turn around and did the math, will it come in to be about, 20%? Could possibly be, but it's just one of those situations that WPAY has done good, but not great. When I first heard about it, everyone expected this to be really a great fund. Has it done good? Yeah, it has. Is it something that you want to have in your portfolio? I'm going to ask you that question. Leave your comments down below. Is this something you want to have in your portfolio? Maybe you do own it. Maybe you're pleased with it. Let me know. I have never invested into it. I am not part of it, but I'd love to see what you guys have to say.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments